Welcome to BizCentral University's presentation on Starting a Business 101, Step by Step. My name is Jonathan Cajigas, and I will be your administrator today. Let's begin. Today's presentation, we will be covering 7 major topics. First, an introduction to starting a business. Second, getting started. Third, legal formation. Fourth, business financing. Fifth, creating a marketing plan. Sixth, how BizCentral USA aids entrepreneurs in starting a business. And seventh, a review. Starting a business fast facts. Each year, millions of people identify a business opportunity and then try to translate that opportunity into a profitable business. Small firms represent 99.7% of all employer firms. Small businesses create more jobs annually than do large businesses. Characteristics of successful small business owners: a desire for responsibility, confidence in their ability to succeed, a high energy level, a need to accomplish goals, strong organizational skills, high degree of commitment. Also, a tolerance for uncertainty, an ability to be flexible, a desire to work hard, total dedication to the business, strong market demand for their product or services, and luck. Benefits of starting a business. Taxes. There is an amazing array of goodies in the tax code to help small business owners. Enjoyment. A business allows you to get paid for doing something that you truly enjoy. Independence and flexibility. More freedom and independence working for yourself. Once the business is firmly established, there's flexibility to make sure you don't miss the events that matter most. Money. The risk of foregoing a steady paycheck can pay off when you own your own business. You can get rich in a small business, or at least do very well financially. We will now discuss getting started. Create a plan. Learn as much as possible about the proposed business. Ask questions. Join industry associations. Research the target market and assess the needs. And study successful competitors carefully. The business plan. Every business begins with an idea, and a business plan is necessary to guide the investigation and development of this idea. A business plan will consider all parts of the business in detail: the industry, competition, target market, risks and success potential, and financials. Location, location, location. Location is important to the success of any business and should be determined early in the planning process. Consider location in regard to customers, suppliers, employees, and government regulations. The selected site should meet the business needs. Registration and licensing. Various types of licenses are required in order to conduct business. Local. Business licenses are issued by cities to businesses located within the city limits and for businesses conducting business within the city limits. State. Businesses may need to be registered with the state tax authority. And federal. A business must have a federal identification number or a federal tax number. Registration and licensing. There may be other licenses that affect particular businesses, such as Occupational Safety and Health Administration, or OSHA, Health Department, Alcoholic Beverage Control, or Department of Agriculture licenses. Always check with the industry associations to determine if other licenses apply to the business. During the business. Before opening, the business owner should consult with an insurance agent to develop a comprehensive insurance plan. A basic package may include the following types of protection: fire, liability, crime, workers' comp, business interruption, automobile, employee health, product liability, and key person. Bookkeeping. Financial records are an extremely important tool for managing the inflows and outflows of a business activity. The basic format includes cash payments journal, cash receipts journal, sales journal, accounts receivable journal, accounts payable journal, and a general journal. The standard financial statements include a balance sheet, income statement, statement of owner's equity, and statement of cash flows. We will now discuss legal formation. Legal formation. There's no universally right structure for all businesses. The decision for the legal form of business will be made to best suit the business owner's needs, personal management style, and financing requirements. Evaluate the advantages and disadvantages of each business formation, paying special attention to the tax implications and government formalities. For starters, it's important to take the time to review the business plan. What should emerge are answers to questions like, do you want investors as shareholders in your company? Do you want to maintain control of the company if you have investors involved? Do you want to avoid double taxation? Is there a great risk of liability associated with your specific business? Forms of business ownership. 4 forms of business ownership. Sole proprietorship, limited to a single owner who has total control of and responsibility for the business. Partnerships, an association of 2 or more persons acting as co-owners of the business. Corporations, a separate legal entity that is formed by filing articles of incorporation with the Secretary of State. Limited liability companies, a hybrid form of organization that combines features of both a partnership and a corporation. S-Corp, a special form of corporation where the business is incorporated as a regular or C corporation, but asks for special permission from the IRS to be taxed as a partnership. Advantages and disadvantages. A sole proprietorship is easy to organize, but the owner is personally liable. There are minimum legal restrictions, but the business terminates with the owner. In a partnership, partners combine funding and talents. There is flexibility in profit and loss sharing. However, individual partners act as agents for the partnership. In a corporation, there is limited liability for managers and stockholders, and ownership is transferable. However, they are costly and complicated to establish, and there is double taxation for regular corporations. An S corporation does not pay income taxes, but they do require extensive record keeping. S corporation income or losses pass through to stockholders and taxed at the individual level. A limited liability company is not personally liable for business debts such as court judgments or legal settlements obtained against the business. However, a few states impose very high taxes on LLCs. LLCs also allow for flexible management.